Good morning, everyone. Thank you so much for joining us this morning for our weekly call for community solutions hosted by the Forbes Funds and GPNP. Our team has hosted these calls weekly since March of 2020 to provide nonprofits with critical resources and updates, a shared space to discuss challenges, a snapshot of relevant policies, and timely insight from subject matter experts. Since that time, the Forbes Funds and GPNP have hosted 5,658 meetings with the participation of over 48,438 community members. And we continue to hear from members that this time remains valuable for discussing emergent needs and opportunities in the social impact sector. We do all of this utilizing a dual framework that draws on the United Nations Sustainable Development Goals and the social determinants of health to align cross-sector and guide the outcomes of our work. Additionally, the 8 returns model guides how we measure the success or returns on various forms of investment. For today's call, we encourage you to go ahead and use the chat function to share your name and organization with the group, as well as any comments or questions you might have during the call. We also strongly encourage you to join us on screen to maximize engagement. We'll reserve time for a Q&A after our speaker presentation today, followed by Forbes Funds GPNP ecosystem updates and a public policy recap. And as always, a friendly reminder that there will be a poll at the end of the call. Please be sure to complete that so we can keep our content and resources relevant to you. So for today's call, we have Beth Mellon from the Pittsburgh Foundation. She's going to talk with us about the Form 990. Beth is a senior account manager with the Pittsburgh Foundation, and she's going to give us information about how this form can be a powerful storytelling tool for nonprofit organizations. And we're going to highlight, see how we can use the form to highlight mission-driven impact, financial stewardship, and organizational transparency. Beth Mellon brings more than 27 years of nonprofit experience to the Pittsburgh Foundation's finance team. Before joining the finance department at the Pittsburgh Foundation, Beth worked at a regional public accounting firm where she managed numerous nonprofit tax engagements, including tax compliance efforts, payroll and benefit-related matters, and accountable plan compliance. She has a BS in Business Administration from Robert Morris University, and Beth is a member of the Finance, Administration, and Operations Group, where she serves on the Conference Planning Committee. So I'm going to go ahead and turn it over to Beth. Thank you so much for joining us, Beth.
Thanks, Christine. Good morning. Good Monday morning, I should say, and I hope everyone had a great weekend. We are excited this morning to talk about the 990 with all of you, and share some thought-provoking questions and give you some food for thought about your 990. So from what I understand, there's a variety of organizations joining us today. So our presentation is just in general format. And I just thought about something. If you want to maybe pull out your 990 from last year and maybe follow along, that might be helpful. So the first couple of slides are just general reminder stuff, so that'll give you some time to pull out your 990 if you want. So I'm going to share my screen. Famous words. All right. So let's get started. So today, what I want to do is let's talk about what is your 990? Who's looking at your 990? Some basic components of it and some filing requirements. And then at the end, we'll share some resources and additional considerations for you. So as we go through each section, if there are any questions along the way, as Christine mentioned, please feel free to put those in the chat box. And Christine, just if you can monitor that, and then.
Absolutely, we'll keep track.
Perfect, thank you. Okay, so what is the Form 990? First of all, I know we all call it a tax return. It's not really a tax return. It's an information return. Tax return would be your Form 990T, T for tax. The 990 is an information return. It's filed by a tax-exempt organization that has been granted tax-exempt status by the IRS. A little bit of history. The form started out years ago, many years ago, as a 2-page document, and it has evolved over the years. In 2008, the IRS did a major overhaul of the form for a few reasons. So they did that to increase transparency and accountability of an organization. to provide a realistic picture of an exempt organization's activities, to clarify the instructions, to add governance questions and promote compliance and good governance practices, to meet e-filing requirements, to reduce the reporting burden on the nonprofit sector by making it easier to complete the form, and to promote compliance by and accountability of nonprofits by making it easier for the IRS to assess risk of noncompliance. So the core form of the 990, there's 12 pages and 16 possible additional schedules. Between the core form, the additional schedules, and the instructions for both, that's a lot of pages. I think the last time I looked, it was a little under 300 pages of paper. So who files a 990 and when? Your 990 is due 5.5 months after your organization's year end. So a December 31 year end, your 990 is due by May 15th of the following year. There is an automatic extension available through the IRS. You have to fill the form out and submit it. And that would be for an additional 6 months. So that brings your final due date to 11.5 months after year end. So December 31 year end, your 990 with the 6-month extension would be due November 15th of the following year. Not all exempt orgs are required to file a 990, so let's take a look at those filing requirements. The filing requirements are based on your organization's gross receipts and total assets. So every organization files a 990. Depending on your size, it'll look a little different. There's the 990N postcard, 990EZ, or the full 990 form. The 990N or e-postcard is submitted electronically through the IRS website. There's no paper form. And this can be done through their website. And there's a helpful user guide. I have the link at the end of the presentation, but it's on the IRS website, and it's appropriately titled IRS Form 990N Electronic Filing System User Guide. So to file a 990N, you just need 8 items. You need your tax ID number, your tax year end, your legal name, your mailing address, any other names you might be doing business or using, your name and address of a principal officer, website address, and confirmation that your organization's gross receipts are $50,000 or less. And then, if applicable, you can attach a statement that the organization has terminated or plans to go out of business. Important note here, if an organization fails to file a 990, a 990EZ, or a postcard, whichever is applicable, if an organization fails to file one of those forms for 3 consecutive years, they will automatically lose their tax exempt status. So there may be a lot of organizations that are volunteer organizations, or maybe, one person shops. So it's important to put that reminder on your calendar, file 990 by X date. So let's talk about public inspection requirements. So the IRS requires that the Form 990, a 990EZ, and other documents be made available for public inspection. However, there's one schedule on the Form 990 that is not subject to public disclosure, and that is Schedule B, Schedule of Contributors. This schedule includes the names and addresses of donors, and for confidentiality reasons, those names and addresses of donors, contributors are not required to be made available to the public. But other information on Schedule B, including the amount of contributions and description of any non-cash contributions, such as stock gifts, is required to be made available unless it clearly identifies the contributor. Also, if you file a 990T to report unrelated business income, that 990T is subject to public disclosure. However, if there are additional forms attached to that 990T, such as foreign filings like a 926 or an 8865, those forms are not included in the public disclosure requirement. So someone can make a request for your 990. They can walk into your office and request it. They can call you. They can send an email. So more information, there's a lot more information, I should say, in the instructions for the 990. So you can find a lot more detail about public disclosure in Appendix D of the 990 instructions. So one last important note here, if you are providing your 990 on your website or another's website, please make sure it's the public disclosure copy, and that would be the copy with Schedule B in it, but with no donor names and addresses. So then you might say, well, who's looking at my 90? Why does this matter? Who's looking at it? Well, the IRS, of course. The IRS is monitoring charities for potentially fraudulent activity and to enforce laws that govern exempt orgs. State regulatory authorities, they see your 990 because some states, if you register for charitable solicitation, some states do require the 990 to be attached to that annual registration. The media looks at salaries and benefits of an organization's management team. It might look at governance structure, perhaps to see who the officers and board members of the organization are, what their compensation might be. The media might look to see how long the organization's been in existence. It may look to see where and how the organization spends its cash. Is it in furtherance of the charitable mission? And how much is spent on fundraising? Who else looks? Potential donors. Donors of the organization might look at your 990 before they make a contribution to ensure that your mission aligns with their values and goals, or to evaluate the governance and policies in place, or to assess your programs or your financial strength or weaknesses. Who else looks? Potential board members. If you've invited someone to be on your board, they might read through the organization's 990 if they anticipate joining the board, and they might look through the governance practices and policies as well, because as a board member, they're going to be reported in Part 7 of the 990, and they have fiduciary responsibility on behalf of that organization that they represent. Your 990 is out there on guidestar.org. If you haven't gone there or signed up, I would advise that we can go out and see what's out there. And lastly, who else is looking? Charitable rating agencies, such as Charity Navigator or Charity Watch, which both rate charities based on certain criteria. So readers of your 990 have different motives or reasons for reading it. So it's important to review your 990 and think about how potential readers react to the information that is being presented. So as we just talked about, there's many readers, right, of your 990. So think of your 990 as your organization's resume. So page 1 of the 990 is what we refer to as the dashboard. Lines 3 through 6, over here on the right-hand side, provide a quick look at how many board members might serve the org, how many employees there are, how many volunteers assist the org. So this whole heading section tells you a lot of information, just like upfront information about the org. What year was it formed? Where is it domiciled? Things like that. So the IRS, when they redid the 990, they wanted to make it easier for the reader to lay out an organization's 990s for, let's say, 3 years. And by doing that, you can look at this dashboard area and look at trends, maybe in changes or increases or decreases in revenue or expenses. So you can lay your own out for 3 years, or you can do a peer comparison, look at your peer organizations and lay out theirs and compare it to yours. So this front page here, this dashboard section, is like a summary. The IRS wanted to make it easier just to say, here's total assets, total liabilities, where are they located, blah, blah, blah. Here's the mission statement. So that's the purpose of page 1 there. Some key financial indicators may show if your organization's contribution revenue, this is on page 1, increased or decreased significantly. Did the organization provide maybe more or fewer grants? Did salaries increase or decrease year to year? If an organization reports a significant variance, it can provide an explanation describing that reason back on Schedule O. So some thoughts for consideration here. Have you looked at your 990 for the past 3 years to notice any trends? And do you compare your 990 with those of your peers? Part 3 on page 2 So this is the page to read, in my opinion, because this is kind of the resume, like I mentioned earlier, of your organization. If the reader is looking to see what your organization does, it's going to read the mission on line 1 and the front page. So does your mission statement reflect what's on your website? And does it reflect what might be reported in your financial statements? If the reader wants to know what communities or populations were served by your organizations, it will read this program statement of program service accomplishments. If the reader heard about your organization through the media, this is where they can quickly learn more about your organization. If the reader is seeking to contribute, or they want to verify if a charity is legit, it might read this page. So on line 4A, when you write your program service accomplishments, so what did you do over the past year? Using statistical data could be helpful to the reader. For example, if my 990 just said, and you're a potential donor or funder, right? And my 990 says, we provided services to those in need, period. Okay, it doesn't tell you much. Or it could say, we provided food and shelter to more than 500 families in Allegheny County, provided X amount of meals to X amount of shelters, food banks, in whatever areas of the city. So the point here is the more you can tell the reader about who you are and what you do, the more helpful it's going to be. So some general considerations for this section. Does your mission statement on your 990 reflect what's on your website and in your financial statement footnotes? Try to be descriptive. Don't be too overwhelming. You don't have to, write a journal on this, but don't lose the reader. Don't copy your website. Be more creative, more specific. Talk about your accomplishments. Throw in some statistical data. And then lastly, there's a question in that section that asks if your organization undertook or removed any major programs. So if so, be sure to check that box. And then back on Schedule O, you can provide a description of the program you either took on or removed from your programs. Make sure any new programs are in alignment with your bylaws, your articles of incorporation, and your original exemption application. So keep in mind, we talked about when the IRS revamped the 990 back in 2007, 2008. That was the first major overhaul of the form since 1979. The IRS created several schedules to gather more detailed information on the activities of exempt orgs for the public and, of course, for itself. Based on activities of the organization and dollar thresholds for reporting activities, there are 16 potential additional schedules that could be triggered to be completed. The reader can quickly view these 38 questions on pages 3 and 4 of the 990 to see what types of activities the organization engaged in. And if any additional schedule is triggered, then the reader can go to that schedule to get more detail. For example, did your organization lobby during the year? Did the organization maintain an office, employees, or agents outside of the United States? Was the organization related to any other organization? And there's a lot more questions, but that's just some sampling. So when you respond to these questions, check the instructions because there's trigger thresholds for each applicable schedule. You may or may not need to file based on the trigger amount. Sometimes the schedule may not be required if the value of that activity does not meet the threshold. So for example, if your organization conducted a fundraiser during the year, did it report more than $15,000 of gross fundraising income and contribution revenue on your statement of revenue, which is back in Section 8? If so if you had $15,000 or more in income from a fundraiser event, if so, Schedule G is probably going to be triggered. So that asks for more detailed information. So to get through this, maybe talk with your finance folks, development, program folks, communications about activities that were undertaken during the year, just to make sure you're covering all of your bases. Part 6 on page 6. This is governance, management, and disclosure and policies. So there's a lot of information here about how an organization is governed and its policies. So the reader of this section can see the number of voting members that are independent, meaning how many board members were there that did not receive compensation from the org or a related org. If the organization amended its bylaws during the year, and if any individuals are related through a family or a business relationship. And if so, there's just a brief description required, such as Bob Jones and Sarah Jones have a family relationship or a business relationship. Also in this section, does the organization have a conflict of interest policy? So I thought I'd just clarify a little bit here, add some information for thought. A conflict of interest policy should include how to disclose a conflict, what happens if a potential or actual conflict should arise, because it's important to have a procedure in place where you might have your officers, directors, board members, key employees complete an annual questionnaire to disclose potential conflicts and relationships. Not only is this a matter of good practice, but it helps to figure out answers to the 990 questions. So this type of questionnaire could be distributed to your board members at the end of the year for them to complete, because the questions, right, would say, did you receive compensation to do this? So they don't know what they're going to get in the future, but they know what they've done in the past, right? So the forms would also ask if the board member had any conflicts during the year. If they were engaged in a vendor type transaction with the org, maybe a board member owns a business with which the organization conducts business. And then that relationship question could be on there. What other boards do your board members serve on? Are there any loans to or from any board members? So the responses from this type of questionnaire could help in determining if Schedule L of the 990 needs to be completed, and more importantly, it demonstrates transparency and compliance efforts on behalf of the organization. Line 11 on the in Part 6 asks if a copy of the form is provided to the board prior to filing. The policy section also asks how compensation was determined for the president, executive director, other key employees. Did this process for determining comp include using comparable data? Is management's salary reviewed each year by a committee and documented? Was this process documented in board meeting minutes? So as a note, let's talking about policies. Policy questions in Part 6, so there's whistleblower, document retention, conflict of interest policy. Those three are specifically mentioned. These questions can be answered yes if you had a policy in place at any point during the year. If, however, let's say you haven't adopted any policies yet, but you're working on them in 2025, but you're working on your 2024 990, you can put a note in there. You might consider putting a note in Schedule O to that effect that, while the answer is no on this year's 990, the organization is proactively adopting policies in 2025. So the point here is strong governance and solid policies help demonstrate that your organization is more likely to be in compliance and effectively carrying out its charitable mission, which promotes confidence to the public and the readers of your 990. Part 7, this is your board listing. Part 7, in my opinion, is probably the most viewed page of the 990. It's here that the officers and board members are listed, along with key employees and highly compensated employees. That's over $100,000. Out of curiosity, readers will likely go here first to review salary and benefit information. Regarding board composition, an organization should read through its bylaws to make sure it is correctly identifying its governing body. So they might be directors. They could be referred to as members, trustees. And when you think about your officers, right, it's not just your chair, your vice chair, your secretary, and your treasurer, but the 990 instructions also define officers, your top management official, so your president or executive director, and the top financial official, so your CFO, director of finance, your controller. One consideration for this section is, do you meet with any employee that is new to being reported in Part 7? So if maybe they're new to your organization, maybe they just hit that $100,000 highly comped employee threshold, it might be their first time being presented on a 990. So do you meet with them and talk about, well, this is what's being reported, this will tie to your W-2, here's your benefits, just to let you know, because no one wants to be surprised when they learn that they're on the organization's 990. So back to the board listing. Any individual that served on the board during the year should be listed. If an individual entered or exited the board during the year, that org should indicate the effective entrance and exit date. Also included would be the average hours per week that the board member individual devotes to their position. It's not a scientific calculation. It's, look at how many board meetings you had throughout the year, see how many hours maybe, and just divide that by 52 weeks. Usually, 1 hour a week would be sufficient, but the words as needed or as required really shouldn't be used. And to be honest, a lot of tax software won't let you enter those words if they want numbers. So compensation reported here in this section should tie to the individual's Form W-2, Box 1 or 5, whichever is higher. Section B, rather, in Part 7 asks for any vendors that were paid more than $100,000 for services rendered. This would come from your 1099 NEC or 1099 miscellaneous. Not included here would be payments for utilities, health premiums, contributions to an employer benefit plan. Those would not be included. As a note, if your organization's year end is other than a calendar year, so let's say you're June 30, so anything but December 31, there will be a difference in compensation reporting. Payroll and independent contractor payments here are based on a calendar year basis. So the compensation ties to the individual's W-2 or 1099 because those forms are filed on a calendar year basis. So you may be a June 30 year end, but the compensation reported here is going to be reflective of January through December of the prior year. The amount of compensation reported for officers, key employees, and highly comped will be different than what's reported in your functional expense section as well. Because again, functional expenses will be presented on your fiscal, July 1 to June 30 versus the comp that's reported here based on W-2 calendar year. Parts 8, 9, and 10. These are the financial statement sections of the 990. So Part 8, that's your statement of revenue. Line 1 relates to contribution revenue received by the org, whether it's from federated campaigns such as United Way or through fundraising events, government grants, or non-cash contributions such as stock. In the interest of time, though, rather than go through each line, I thought it just might be helpful to look at maybe 1 or 2 lines that sometimes cause a little bit of confusion to the reader. So on line 8, this is where if you have your 990 available, take a look at line 8 on the statement of revenue, section 8. Line 8 income presents income from fundraising activity. So a lot of times this line might be completed incorrectly, or it might look skewed or look like an organization's fundraiser lost money, and that's simply not the case. So for example, and I'm gonna throw some numbers out here at you, so just as an example. So if your organization had a fundraising event and it sold 200 tickets and each ticket was $200, so you brought in gross revenue of $40,000. And let's say the value of that ticket, of each ticket, $50 was the value for dinner. Okay, so for $200, 50 was the value for dinner, 150 would be the value of the contribution. So when you look at line 8, it asks you, there's parentheses there, right? It'll say gross income, not including blank amount reported on line 1 as contribution revenue. So 200 tickets at $200 is $40,000 in gross revenue. Charitable portion was $150, so that's 30,000. 200 times 150, $30,000 that will be reported up above on line 1C is contribution revenue. And then the value of dinner, which was $50 per ticket times 200 tickets, is $10,000. That's reported here on line A as gross income, not including that $30,000 of contribution. I know Monday morning it's a little early to be throwing these numbers at you, but if you're following along on the form, you'll see what I'm getting at here. So after you enter the expenses on line 8B, right? So right now you might have $10,000 on the first line. 8B might be your expenses. 8C might appear to be a loss, but it's really not, because keep in mind, you've got that $30,000 reported up on line 1C as contribution revenue. So again, The reader might look at this and be like, well, I went to their fundraiser and paid X amount for a ticket. They didn't even make any money on it, but you did. It's just broken up. Typically on financial statements, that $40,000 would be in the revenue section of your financial statements on your income statement. And then the 40,000, the expense would be in the expense section of the financial statements. So another difference here in the statement of revenue between the 990 and financial statements could be on line 3. That's your investment income. Your financial statements will likely present your investment income net of investment expense. On your 990, it's total gross investment income that would include your investment expense. That's reported on line 3, and then your investment expenses would be reported on your functional expenses line 11F. So when you look at your financial statements, it'll say income from investments, $100,000 net of investment expense. But on your 990, you're going to show that in your revenue, and then you're going to show the expense in your functional expenses. Similar to that is line 7, which reports realized gain or loss. Usually in your financial statements, you'll see unrealized, realized gain or loss reported together. For the 990, you separate those out and you report the realized gain or loss on your statement of revenue. Page 9, your statement of functional expense. This is where your organization reports its expenses by category. If the expense was program management in general or fundraising related. Grants are to organizations, individuals, or foreign individuals or organizations. Grant expense is considered program related. You should be clear about what your program versus your management in general versus your fundraising expenses are and how you track those internally. Also, if you did receive grants and contributions, did you write grant proposals to get those dollars? Did you make phone calls to get that contribution revenue? If so, there should be some expense reported under the fundraising column attributable to fundraising. So a portion of your executive director's salary, payroll taxes, benefits, if they're the person that does the majority of fundraising. Perhaps it's an allocation from printing, office supplies, and advertising. So the reader of the 990 sometimes wants to know what your organization is spending your charitable dollars on. So they'll go to your functional expense page. The reader might also want to see how much you spent on your audit services. They can go to line 11C. They can see how much you spent on a lobbying consultant. So there's different breakout there on the functional expenses. Gets into more detail than your financial statements. So a quick indicator of how effectively an organization is managing its expenditures is how to calculate the program expense ratio. This is calculated by taking your total program expense, so it's column B on your functional expenses, and divide that by your total expenses. So charity rating agency might use this ratio. A good benchmark might be between 70 and 80% of expenses for program. You could do this with your management in general and your fundraising as well. Is your organization spending too much on management and overhead or too much on fundraising and not bringing in any contribution revenue? Things to look at. Another ratio here might be your fundraising efficiency ratio. From part 8, your statement of revenue, take your total contribution revenue up on line 1H, divide that by your total fundraising expenses on your functional expense schedule. So basically, the money that you're bringing in, what's it costing you, right? For example, if your org reports contribution revenue of around $100,000, your fundraising expenses are $10,000, your fundraising efficiency would be 10%. So these ratios can help you keep track of your financial progress, and these ratios may be calculated by the reader of the 990 to determine your financial health. Section 10 or part 10 of is the balance sheet that ties to your financial statements. Usually there's not much discussion around the balance sheet, but the reader might look here to see if there's any loans receivable or payable to or from anyone that was listed on your board list. And then part 12 talks about, what kind of financial statements do you have? Are they compiled, reviewed, or audited? I threw in some the definitions here, or the limits here of when you're required to have an audit. And this is based on PA, Bureau of Charitable Organizations. If you have $750,000 or more in contribution revenue, an audit would be required. So real quick, the difference between a review, an audit, and a compilation. Compilation, a CPA is hired to look at your financials, but they don't have to provide any assurance. They don't have to be independent, but they must indicate that indicate that they're not independent in the report. A compilation provides the org with confidence that its financials appear to be presented in correct form. There's no obvious modifications needed. A review means the CPA conducted limited work, such as inquiries and some analytical procedures, to obtain limited assurance that the financials are free of material misstatement. An audit means the CPA provides more work. They go into more detail to provide more reliability. They perform more inquiries, analytical procedures to obtain an understanding of your internal controls, and they will assess risk of material misstatement and fraud. So PA, we talked about the $750,000, and there are the limits on the slide. So that's what I wanted to say. Revenue, the gross contributions, when you're looking at your amounts here, they include federated campaign contributions, contribution portion of membership dues, income from fundraising, and general contributions. So wrapping this all up, just a few closing questions. Check your narratives in part 3. Do they reflect the activities of your org? Do you review that narrative and update it every year if applicable? Do you review your organization's financial health and trends? Look at that dashboard on page 1 because someone out there might be looking at that information. Did you read through those trigger questions on pages 3 and 4 and the reporting thresholds? Do you periodically review your bylaws to ensure compliance with board reporting in part 7? Does your org have the correct amount of board members? And then lastly, if you're uploading your 990 to your website or someone else's, please make sure it's the public disclosure copy. All right, final thoughts. And these are extra thoughts that I just thought would be helpful for you. Has your organization filed that PA annual report? It's a new filing requirement with the Commonwealth of Pennsylvania Department of State. This used to be the decennial report that was due every 10 years on the year ending in 1, so 2001, 2011, 2021. Now they want it annually. It is due for exempt orgs. It is due by June 30. It is free to file. You just have to get an account set up on the PA Department of State's website, and you go in, and it just asks a few questions, and then you file it, and you're good for another year. So you can go to file.dos.pa.gov. Second, does your organization file with that BA, Bureau of Charitable Organizations, with the Department of State to solicit for contributions in Pennsylvania? That was those audit requirements we were just looking at. You can find more information on the Department of State's website about that registration requirements. Does your org perhaps need to register in other states to solicit? Look at your Schedule B for the past couple of years. Do you have donors consistently year to year from Ohio, New York, Virginia? Maybe they're just close by, but nonetheless, they're from out of Pennsylvania. So you might have to register in those states for charitable solicitation registration. So you can look on different sites, different states' sites to get information there. Look at your organization's website. Do you have a Donate Now button? That right there can trigger filing in multiple states, because in theory, anyone from all over the country could donate through that Donate Now button. Is your organization aware of the PA 1099 miscellaneous withholding tax? If you're paying a vendor from out of state, let's say that a consultant from New York, and then they come here to Pittsburgh and work on your project, then they leave, the portion of their invoice attributable to the time they spent in Pennsylvania is likely subject to a 3.07% PA withholding income tax. So you have to get set up and withhold and remit that tax. And do you require a W-9 from your vendors before payment? That gives you their tax information. And then lastly, if you do have fundraisers, do you or have you applied for a small games of chance license from your home county to see to get that license to conduct raffles and gaming at fundraisers? More information on that can be found at revenue.pa.gov. Lastly, here's those resources: irs.gov. Click on forms and forms and publications. Put in 990. You'll pull up those instructions. The glossary is helpful. The what's new section is helpful. That 990N, if that is applicable to your organization, there's that handy dandy user guide. GuideStar, check that out. See if your organization's 990 is out there. And GuideStar gets the 990s from the IRS. And Charity Navigator, that's the rating agency. So as we mentioned at the beginning, your 990 is a public document. So please make sure your 990 is prepared in conjunction with your financial statements, and use your 990 as a marketing tool for your organization. So I hope this provided some thought-provoking questions and explanations about how the reader of your 990 might interpret the information or use it to measure your organization's financial health. Please feel free to reach out to Christine with any follow-up questions or comments. And thank you again, and enjoy the rest of your week.
Thank you so much, Beth. Very informative. Really appreciate that information. I know we're all getting ready to do that. I think while I check the chat for questions, I'm curious what your best advice is for those of us in the room who don't have a dedicated person like yourself that's an expert on these things. What would be your advice for next steps? We'll be sending out these resources to everyone following the call, so I know that will be sort of our first step, but are there organizations or other tools locally that we can lean into whenever we have questions, as we're going through these questions that you've offered us, if we need guidance?
So a couple ideas come to mind real quick. The 990 instructions, although they can be a little bit voluminous, but they're very helpful. That they might help you hone in on a definition, or what when does this do? How do I do this? What does this mean? Local, your local accounting firms, CPA firms, they would help. I'm sure they would help. There's free like CPE events or CPE webinars. So I would maybe keep your eyes open for either through the AICPA, PICPA, that's Pennsylvania CPAs. I'm trying to think real quick. Just other webinars on 990s that might help. Phone a friend. You can always ask a friend, right? Maybe you know a friend that's an accountant, or they know someone that's an accountant or a tax accountant that could help too. But hey, the 990 instructions, that's a good start.
Yeah. Yeah, these are great resources. And as you said, that's part of the power of nonprofit, and what we're trying to accomplish here is we're not experts in everything. So hopefully we're building those relationships that somebody you can call or email, get through this part and really make it work for you. I really loved too how you highlighted, I know I've done this myself. I love that you highlighted the way that it can be used to show your audience or anybody or the public what you're made of and what you're doing and things like that. And I'm curious if you wanted to expand on that just a little bit. I know for myself, and it might be valuable to others in the room, it's also been valuable to proactively look up 990s of other organizations to inform your work. If you're looking at what people are paying their employees or what kind of hours they have or things like that, it's just as much a storytelling tool in that context. And I think it's very valuable in research. So I didn't know if you wanted to comment on that as well.
Yeah. So when an organization, maybe an organization applies for a grant, right? To like a grant making organization. That grant making organization, I would think, would, pull up your organization's 990 and say, okay, let's take a look here. Where are they, what are they bringing in? What's their revenue? What are they spending their money on? How much are they devoting to their programs versus that management in general and fundraising expense? Who's on their board? Do they have any policies in place? So again, that's kind of where I was coming from, was what's the reader of your 990, your organization's 990? What are they looking at? Why? Why does it matter? What are they comparing? Are they looking at some of those ratios? They might have more ratios that they look at than what I was able to provide. GuideStar, though I know organizations, grant making orgs probably go out on GuideStar to vet an organization to make sure they are a 501c3 charity, right? They might look and say, oh, they're new. Maybe they're a startup, or oh, look at the dashboard on page 1. Oh, the revenue's been declining. I wonder what's going on. Oh, their top management official had a huge payout last year. Did they retire? Were they let go? Are they on severance? So there's just a myriad of things that your 990 can tell the reader, right? And again, who's reading it? The IRS, the media, your peers, state regulatory authorities. So So that's why I always say, even if you're a one-person shop, right, a small organization, read through that 990 and see, as the reader of it, not as the organization president or executive director, but as an outside reader, does this make sense? And what's it telling? What is it telling the community, or the funders, right? Your funders, your donors. What is it telling them about your organization? Hope that helps.
Awesome. I think that's even more reason for us to, empower ourselves to be so involved in this process and not pass it off to, a CPA or someone because it is so important to our storytelling. They may not be able to capture that. So thank you
Well,
so
that's a
much for
good
giving
point.
us, yeah, thank you for giving us all these tools so we
Of
can do
course.
that. This all sounds very doable. If you all have any further questions, please, as Beth said, feel free to email us. We will have the video recording of this on the GPMP member portal later today and on our YouTube channel at the end of the week. And thank you so much, Beth. I am going to go ahead and pass it over to Emily for our public policy updates.
All right. Well, thank you,
Thanks,
Christine.
Beth.
Thanks, Emily. Everyone take care. Have a great week. Bye.
Thank you, Beth. Thank you, Christine. And thank you, Bree, for launching the poll. I appreciate you sharing that while we are getting into our public policy updates. Let me just share my screen really quickly. We had a great conversation last Thursday, which was our April Public Policy Committee meeting. And we had about 40 folks throughout the conversation join us and weigh in on a couple of critical issues. So I just wanted to provide a brief recap in our call this morning, since there were a lot of things that resonated with the participants in the call. So as a reminder, I'm Emily Francis. I'm the director of the Greater Pittsburgh Nonprofit Partnership. And a critical part of what GPNP does is amplify nonprofits' voices and especially share stories and data as it relates to empowering nonprofits to advocate for their organizations and those that they serve. And so the major questions and presentations last week were focusing on how nonprofit organizations might diversify revenue streams to take advantage of tax credits from the Department of Community and Economic Development from the state of Pennsylvania. How might we think about executive orders and their impact on nonprofits, especially since there were a couple of scares over the last couple of weeks around executive orders potentially targeting the tax exempt status of nonprofit organizations in the environmental space? And then finally, how might we think about economic impacts and telling our story to really talk about in a more economically centered way the value of the nonprofit sector. PANO is commissioning a study currently on what the economic output and value of the nonprofit sector is. But based on most available recent data, about 15% of employed individuals in the state of Pennsylvania are employed by the nonprofit sector. And so looking at just direct employees, that's not including board members, that's not including those served, and that's not including volunteers. We have a huge economic footprint in this state. And so when we talk about things like advocacy and policy and why nonprofits are really critical in telling and relaying these stories, this is exactly why. And so strengthening our organizations by diversifying revenue streams and making sure that we're kind of pulling all these things together is really critical in what GPNP does. And so for DCED, while a lot of organizations don't necessarily have a relationship with this department, they offer a ton of benefits in the form of tax credits through partnerships with a specific private organization or private company, which can be any small business, any bank, any corporate entity, to benefit from tax credits in partnership with that nonprofit organization. And it's a one-to-one partnership for these tax credits where the company is the contributor and the nonprofit organization is the beneficiary. And so the tax credits that we heard about last week were the neighborhood assistance program, the special program priorities bucket, and the charitable food program, in addition to the neighborhood partnership program. And so the three, one-year opportunities are what I'll focus most of the update on, and kind of paraphrasing what John has shared with us last week. But the tax credit amounts vary depending on the program. And so for the neighborhood assistance program, the focus of this is benefit to low-income individuals in a specific geographic area, and the tax credit percent is 65%. Special program priorities are to support specific targeted priorities, and the tax credit is up to 90%. And the charitable food program is focused on combating food insecurity and building supports for individuals experiencing insecurity within communities. And we had Mickey Howell from the Greater Pittsburgh Community Food Bank talk about how the food bank has successfully leveraged this tax credit and related tax credits to really tackle this issue over the last few years. And so There were a ton of success stories shared on this call last week, and the recording was not, we did not record the meeting because of some of the conversations that we had throughout the presentation, but we do have a summary of the information. Thank you to Bree and Christine, who were taking fantastic notes during the conversation, that we'll be sharing out in the member portal and also in our newsletter this week. And so again, this is a overview of neighborhood assistance program, special program priorities, charitable food program, and NPP. The overall tax credit allocation, which Jonna made sure to underscore as of 2024, is about $72 million statewide. This used to be $18 million, and then it doubled to $36 million, and then doubled to $72 million. And this was due to nonprofit advocacy and awareness that this program existed, and talking to elected officials about why more dollars needed to be leveraged in this format. And so advocacy in this space works. We know that when we make an economic case for the impact of our work, it works, and it really resonates with folks who might work in different sectors. And that is, again, another reason why, in addition to diversifying revenue stream, this is a program that can really bolster advocacy experience as you gain more interactions with, government officials and cross-sector partners as well. And again, eligible funders can be any company in Pennsylvania paying state taxes. So some of the highlights included banks, utilities companies, healthcare companies, manufacturers, small businesses, and there is no pre-approval required for the company, like with the EITC or the that tax credit. Some other things to keep in mind is that a lot of funders like UPMC set internal deadlines early. And so for this year, March 15th was really the deadline that the NAP application opened, but they were looking at proposals and having meetings in fall to figure out who these partners could be. And so some things around planning for this: fall is a good time to plan projects and make sure that they are shovel ready, for lack of a better word, and make connections to funders for the next cycle of funding. January is a good time to start outreach to funders once DCED signals that the spring opening for this is coming. And so project examples and success stories that we've seen in this region already: small scale brick and mortar fixes, equipment purchases, pilot programs, and fundraising as a tip is to leverage your board and your network heavily. There might be a board member, at your organization who also has a company that pays taxes in PA. That would be a great partner opportunity for this. It's really just kind of putting the word out there, letting people know that you are looking to identify funders. The second update during our presentation last week was from our team, Craig Mayer, who's our director of learning labs at the Forbes Funds, to talk about a survey that we'll be publishing in the next couple of weeks around the economic impact of tariffs on nonprofits in Southwest Pennsylvania. And so we know from Public Source and some other local news stations throughout our region that economic uncertainty is having a huge impact on not only startups, but also companies based in this region, and also small businesses. And there's a lot of questions that people have around inflationary or recessionary impacts that this might have. And the reason that this is relevant to the nonprofit sector is because I'm actually presenting today from Community Forge in Wilkinsburg. Patrick Cooper was our speaker 2 weeks ago, and one of the things that he referenced is that as they're working on updating this space continuously, budgets, as we are outfitting new spaces or shared third spaces with collaborative partners, are going to shift. If we're trying to do things like capital projects and improvements within our spaces, tariffs are going to impact that element of programming and operational budgets. And so again, it's another space where, especially in terms of financial uncertainty, that is being created. And so being able to talk about how nonprofits are innovated, how we are a significant portion of the workforce, how our economic development greatly impacts the state and nationally the broader GDP of this country is huge. And so looking at how we can better tell that story in the economic context and kind of shift the language from folks seeing nonprofits as charities or purely nonprofits to community leaders and innovators and experts with an economic footprint in the work that we do, the better. And then finally, the last piece of the presentation last week was an update from Dana Kuhnlein from Reimagine Appalachia. There was a great conversation last Tuesday that they hosted as there were rumors of executive orders that might impact nonprofit organizations. And so these are some of the anticipated impacts that were leaked, and I believe it was initially via Signal, but then a couple of news outlets picked it up as well. The first would be redefining climate-related nonprofit activity as illegal for 501c3 organizations to participate in. And so this would disqualify organizations working on the intersections of climate work from being considered tax exempt. And so we've seen a lot of attacks on DEI-focused organizations or organizations serving immigrants and refugees, and this seems to be the next wave of executive orders that would be aimed at the nonprofit sector. A couple of other pieces include branding climate organizations as terrorist-affiliated organizations, blocking grants to nonprofits with overseas activities, impacting our global partnerships and funding that we have internationally, targeting student loan forgiveness programs, directing attacks on major foundations, which again underscores the impact between and the relationship between nonprofit and philanthropic sector and the need to partner in this conversation to be able to respond and proactively plan for how this is going to impact our work in our region. And then finally, instating new federal inspections on nonprofits that receive grants. And so this would be kind of an extension of what we're seeing at the federal government right now, with a review of the efficiency of organizations or where funds are being spent, that would be extended from government departments to nonprofits that receive grants or government funding. And so this is just kind of a brief overview. And one of the things that we talked about is, where did these rumors and conversations come from? So was this let's leak a little bit of information to see what the reaction is? There's been a huge response from the nonprofit sector on specific executive orders, really demonstrating the legal expertise and capability of our sector. But also it could have been an accidental leak that we proactively and very strongly responded to as a sector, to kind of force in a way that we've seen a lot of responses to executive orders and potential bills, demonstrate the impact of what these policies would do and cause elected officials to say, you know what, this isn't a good choice, and we're going to kind of backtrack on this. And so this was really, I think it was referred to during the call as kind of like a fire drill, and a really good test of how is our sector going to respond. It also gives us the opportunity to recognize, you know, even if this executive order is not finalized or active at this point, we need to remain vigilant. We need to stay updated on these topics and learn how to have these conversations with our boards, with our cross-sector partners, and folks within our networks. And I understand that it is 11, so if anybody has to, jump off, that's totally okay. I'm going to keep giving this update just so it's included in our recording for the week. One thing that I do want to highlight at the intersection of the legal and nonprofit and government sectors is House Resolution 1526. And so this is also known or being talked about in the news as the No Rogue Rulings Act of 2025, or NORA. And this would limit federal district courts' authority to issue nationwide injunctions, as we've seen as an action to pause the impacts or cause a freeze of a lot of executive orders to this point. And the reason that we're talking about this is not because it directly calls out nonprofit organizations, but this has been a measure to combat a lot of the executive orders that would otherwise impact nonprofits. And so thinking through, how does the resolution that has already passed the House of Representatives, I believe it's sitting in the Senate Judiciary Committee currently. I haven't seen any updates about, when that might be brought to the floor for a vote in the Senate. But educating elected officials about, again, not this ruling or not this bill as it has, as it is stated, or the language in the bill, but here are the implications if this is passed, is something that we really need to continue getting more comfortable doing, because there's a lot coming across elected officials' desks right now. There are a lot of questions and pieces for uncertainty, with them too. And so the more that we can educate and clarify the impacts of legislations like this, it is critical. And so this is something that, again, does require Senate approval and then presidential assent, but making sure that we're paying attention to that timeline is huge, because if it does get passed, it would increase the amount of burden per organization or group of organization that would be initiating separate legal actions versus an injunction applying across the entire nation. Delayed relief for communities served by nonprofits where an executive order might impact a specific type of funding or specific type of organizations. And so even if there is a freeze because of an executive order with, legal support that is challenging it, there are much more disparate conversations and capacities that need to be coordinated. And then finally, strategic challenge of coordinating those efforts across different jurisdictions and types of organizations is significant. And so the recommendation at this point is, stay informed, think through who in your network has access to legal counsel. What is your advocacy capacity, expertise, and what strengths do you have that you can leverage within your network and with your partners? And then how can we engage in collaborative action from the space of education and raising awareness about the impacts of these? And then finally, something that has remained, top of mind for folks in the midst of this federal budget is the impact of decreases to Medicaid and how that would uniquely impact the nonprofit sector and those we serve. So Medicaid does constitute a significant portion of the committee's jurisdiction. That's the House Energy and Commerce Committee, and it's up to them to identify $880 billion in federal spending cuts that would be distributed over the next decade. And Medicaid is a huge area where proposed cuts would directly impact that funding, which would again impact broader healthcare access. 41% of births throughout the United States are supported in part or in full by Medicaid dollars. And so when we think about who these dollars impact and the individuals that, this type of funding would touch, it's significant. And so looking at who's taking the lead on this regionally, we did have the Southwest Pennsylvania Partnership on Aging speak a couple months ago. And I just really wanted to share this to make sure that this is top of everybody's agenda again. Talk about it in your advocacy conversations. Look at your programming and, consider how many individuals are benefiting from Medicaid that receive your services. Some of your services might be funded through Medicaid. And so just making sure that we're taking into account impacts, again, on our organizations and also on the broader communities, even if Medicaid is not something that, supports our specific organization. And then the recommendation, advocacy, collaboration, financial planning, engaging with community members to pull stories and also educate elected officials, and then also monitoring to stay up to date on legislative developments. I've been sharing this every week, but the National Council on Nonprofits, Boulder Advocacy, there are some really great resources if advocacy is a new tool that you're adding to your organizational skill set and your focus. If this is not something that you've done in the past, get comfortable drafting talking points using the scripts that are shared by National Council of Nonprofits and Boulder Advocacy and PANO and GPNP. There are a lot of resources in this space. And again, educating from the sake of, understanding the impact on your organization is great. Understanding community impact is better because it puts information in the context of constituents and gives specific numbers. And making sure that that's, again, from that educational standpoint, is the easiest area where nonprofit organizations can get involved. And we know this works because there's a lot of pressure in response to executive orders that is then necessitating, additional executive orders or potential measures that would make it difficult for nonprofits to advocate and speak about the impact of those things. So we know it works. We know it matters. If you have any question about, how to get this work started within your organization, how your board can get involved, please feel free to reach out. We have the advocacy capacity assessment and curriculum, and we're happy to support. I'll pause here. We did end our first call for speakers for Summit last week, and we'll be sending out some targeted emails to members of our ecosystem to invite them to host specific panels, presentations, and workshops during the Summit and during lead-up events this year. So stay tuned for more information about our Summit. And thank you so much, Christine. I'll turn it back over to you.
So much, Emily. Thanks everyone for joining us today. Thank you, Beth, for all of the great advice. Thank you, Emily, for the policy updates. We hope you have a great week, and we will see you next week. Bye, everyone.